So finally, on Friday, the new government, Prime Minister Liz Truss and Chancellor Kwasi Kwarteng were finally able to give us their emergency budget, labelled a mini budget. This wasn't a full budget that normally takes place in late September, early October, or maybe in March, depending on who's in charge. But this wasn't one of those. This was meant to be, look, this is what we need to say about right now, what we're going to do, because things have got pretty dire, haven't they? We know about energy bills. We know how expensive they are getting. We know about inflation putting up prices everywhere else as well. We know from the Bank of England on Thursday that we're probably already in recession. It's 2 quarters of successive negative growth in the economy. Things aren't bad. What are we going to do? Now, this was meant to happen earlier. Obviously, we had the whole summer by the leadership race delayed when we actually could have anyone in charge to make any kind of decisions. And then obviously, sadly, the Queen passed away and we had the funeral and we had a kind of moratorium, nothing really happening at all. So finally, on Friday before Parliament closes again for conference season, they've hardly done anything this summer, have they? But before that happened, the Chancellor stood up and delivered this mini budget. You might be thinking, great. What else is there going to be to help us right now? What other things are going to really put more money in my pocket to cope with these costs? I'll take you through the main things right now, but what is worth saying about the kind of belief system seems to be from this new government is something called trickle-down economics. Now, I'm not an economist. You're probably also not an economist. But what this basically means, the whole idea behind this is you put more wealth, more money into the system, at the top, it will trickle down and it will get to everybody else. So everyone else will be better off. The economy will grow and as a result, everyone will be in a better place. Now, this is something which there are lots of articles you can read, I'm sure many videos online talking about how this really isn't kind of how many kind of people are thinking right now. Joe Biden himself tweeted just last week saying it doesn't work. You have to grow from the bottom and the middle. So this is kind of seeing the announcements we can go through in a moment. A lot of the commentators seem to be saying this is a massive, massive risk. This is going to be something that either works and everyone else is criticising it, goes, all right, sorry, bad enough, or it's going to blow up in their faces and we're all going to be in a much, much worse position. Obviously, we can't say right now which way that's going to go, but I certainly, as a personally, would like to have seen more help for people who are on lower incomes and lower salaries and so forth, rather than people who are doing quite well. And they're the ones who are really going to benefit from these announcements. And also very clearly say up front, other than the energy price freeze, the energy price guarantee, which was announced a few weeks ago, again, I've got a whole video on that you can check if you want to watch that. Nothing else is coming in terms of direct support. There's that, there's the £400, which was announced for people's energy bills back when Rishi Sunak was Chancellor, and the additional support for some people on certain benefits. That is it. There's nothing new on top of those measures. Remember, the energy price cap freeze is still going to see our bills go up by a huge amount on the 1st of October for probably a couple of years. So we are still going to be spending more, okay? More money from our bills, from other things we're spending is going to go up. Because the hope is these other measures will ultimately boost the economy and bring down inflation. But let's start off with the big announcements. And the first one here, in fact, most of these were already leaked, okay? But in the days beforehand, you could read about all the papers. So on Friday, there were one big surprise, but most of these were already announced. The first one is about national insurance. National insurance, as I'm sure you know, is a tax that comes, if you're employed, off your salary before you get it, along with income tax, which we'll come back to, or if you're self-employed, most of the time you're going to have to pay that yourself. It's quite an important one as well, because national insurance, if you make, as long as you're getting that, it means you're more likely to be eligible for the state pension later on. But ultimately, it's a tax, same as income tax, comes off your bill. Now, you might remember, if you watch my videos regularly, that back in March, at the last proper budget, or it could have been an emergency budget, things have been so up in the air over the last few years. There's been so many of these kind of extra kind of announcements. But back in March, it was announced that there would be an increase, a hike to national insurance of 1.25 percentage points. That means that everyone will be paying more money. And the whole point of this extra in national insurance was to go towards social care. The NHS needs its money to pay for social care. So this was the way to actually fund that. That was the whole idea behind it. That has been scrapped from the beginning of November. So your pay from November onwards, maybe December, maybe January, depending if your employer has the ability to update their systems in time. If not, they'll backdate it. But you will have more money in your take-home pay as a result of this change. But it's not going to be massive. I've got some numbers here and I'll just sort of share some quickly with you. If you earn £20,000 a year, you'll be better off by £93 over a year. If you earn 50k over a year, things are looking better for you, £468 better off. And if you earn £100,000 in a year, you'll get £1,093 back in your pay just from the national insurance increase reversal. So as we can see here, and this is the thing we're going to see with the other things we announced about, the people who are well off, they are going to be even better off as a result of this change. People who are on lower incomes, they're going to see a very, very small amount. Nothing really that's going to kind of counter the additional costs that we are paying right now. What's important to say here is we aren't necessarily going back to where we were in April when this increase started, because the other thing that was announced back then was an increase to the threshold before you start paying national insurance, and that is staying the same. So you're still going to be better off now than when you were. We're not going completely back to April. We're going to be slightly better off. Everyone will be because of that threshold increase. But yeah, we've had 6 months of this extra tax, and it's gone back down. And that money was going to the NHS. Well, that's got to be found somewhere else at some point, hasn't it? And I said I'll come back to income tax because these are the other big things that have been announced. Now, one of them again was quite sort of widely leaked that this was going to happen, and actually it was already announced that it was going to happen in 2024. It's been brought forward a year. This is for the basic rate of tax. So if you earn over £12,570 in a year, the first amount up to £50,270, that is taxed at 20% right now. Okay, so below that you don't pay any tax. Above that you pay a different rate of tax, a higher rate of tax. That 20% rate of tax from April next year, 2023, that will drop down to 19%. So yes, this is a tax cut. It will mean there's more money for you from April onwards. But again, this is one of the things that's going to benefit people with higher salaries. In fact, everyone will benefit that. As long as you earn over £12,571, you will benefit from this a little bit. But if you don't earn much money at all, it's not going to make a massive difference. So this 1% will average out roughly £170 less tax in the next financial year. So from April 2023 to April 2024. But yeah, that will vary again depending on how much you earn. So if you're a basic rate taxpayer, that's going to be around 130 quid that you're going to pocket extra. Higher rate taxpayers, the average there is going to be 360 quid. Again, obviously it varies depending on your salary. But again, it's a very, very good example here again of how these big announcements, they sound fantastic. They're great, I'm going to pay less tax. But unless you are a higher earner, you're not going to see, again, much money and to really help with those other costs that are going on right now, the other increased costs. And in fact, one of the things to kind of knock on of this, which is quite interesting, is that tax relief on your pension contributions, which is normally at the basic rate, if you're a basic rate taxpayer, that'll also drop down from 20% to 19%, which means there's less free money from the government going into your pension. So it won't be the same in terms of how much you'll kind of get back. You'll definitely get more back from that than you'll lose in the pension contributions. But obviously pension contributions over the years can quickly sort of grow. So it's kind of taken with one hand, given with the other, but that is happening a year earlier than planned. Now, sticking with income tax, there was another announcement, and this one was a total surprise. It was a rabbit out of a hat. Ta-da, this is a kind of like a little trick for you all, a little treat for you all. But I say for you all, it's not for you all, it's not for me, it's not for most of you. It's for the really, really, really rich, the really wealthy, the high earners. Anyone who earns over £150,000 a year, which is actually a relatively small amount. 660,000 people fall into this bracket. That 45% tax, additional tax bracket is gone. It is completely wiped. Not reduced, not changed the level you pay, it is completely gone. So basically now, any earnings above £50,271 will be at 40%. Completely. And you might think, what's 5%, what difference does that make? But it can make quite a big difference if you are, say, a high earner. It's estimated to average around £10,000 less tax each year for those people. That's on average. If you're one of the super rich, the CEOs, the people in charge of the oil companies, of the banks and the millionaires out there, it's going to be a lot more money. They are going to be sort of going, why, thank you very much. And it's this weird kind of like, Ken, we've had all these changes helping people who are higher earners. And generally the higher earners right now, yes, they will also be facing the same costs. They also will perhaps have increased costs they have to cover. They've got bigger houses and your energy bills are higher as well. But they're probably also going to have more money available to them in order to cover those costs and get through this. So it's a very, very weird kind of philosophy coming from this government. This, again, they're talking about this told idea, this trickle down economy. This money will eventually come down to us because these people will spend more money, they'll stimulate the economy, or that in turn could obviously boost the inflation. But ultimately it will come back to everybody else. But that is kind of what has been done. A couple more tax things worth sharing with you as well. Dividend tax, that was due to increase, same as national insurance, by 1.25 percentage points from 7.5% to 0.75%. That is not going to happen. That has been scrapped, as has an increase on corporation tax. That was due to jump from 19% to 25%. Again, all these things are in April, all these tax ones. That again will not be happening either. In theory, that means that businesses will have more money available to them, whether that's to cover their increased costs or maybe to increase wages or whatever it might be. But that isn't going to be happening. And also, bit of a sideline here, but the cap on bankers' bonuses, that has been scrapped as well. Now, the argument here put forward by the Chancellor is that it just meant that they were getting paid more in their salaries. They were still getting the money, but not via the bonuses, or actually they were going elsewhere. Remains to be seen how true this is, what difference it will make in terms of where people stay or go, but that has been scrapped. Now, a couple more things to talk about as well. I'll talk about stamp duty in a second, but first of all, one change to benefits. It's worth noting if you are someone who gets benefits. At the moment, you have to work at least 9 hours a week part-time in order to avoid sanctions on your universal credit and your benefits. That is going to increase from next week to 12 hours every single week, and from January next year it's going to increase to 15 hours a week. So they're the minimum hours you have to be earning money without losing out on some of the money you get from your benefits. The idea here from the government is that it encourages more people back to work. Now, the practicality of this is obviously that sometimes people are working these low hours because the cost of childcare is absolutely astronomical, and just for your minimum wage, if you work an extra 3 hours a week, that's not going to cover your childcare costs. An extra 6 hours is not going to cover your childcare costs for those hours, whatever it might be. Of course, there are many reasons why people, not just because of children, why people are in those kind of situations, but that is happening right away from 9 to 12 hours and up to 15 hours from January. And if you don't do that, if you don't at least show that you're trying to get those hours, then obviously you could find sanctions. The last one to tell you about involves stamp duty. As I'm sure you'll know, stamp duty is a tax which you as the buyer pays when you get a house, when you buy a property. Not the seller, the buyer pays it. And this works in thresholds. So there are different amounts you either don't pay on a bit at the beginning, and then the next amount of cash you pay a certain amount, and the next amount pay another amount. What they've done this time is they have changed the thresholds on this. So you pay no stamp duty is now paid on the first £250,000 of a property. That's double the previous threshold of £125,000. And this is permanent. You might remember there was a holiday put on during the pandemic. Temporarily, this was available to you. This is now permanent. This is what it's going to be. If you're a first-time buyer, that is even larger. The amount where you will pay no stamp duty is up from £300,000 to £425,000. So if you buy a house that is £425,000 or less, there is no stamp duty to pay as a first-time buyer. Also, the eligibility where you can get this kind of 0% threshold as a first-time buyer, that's also increased. It used to be houses costing £500,000 or less. It's now gone up to £625,000. So that means you can buy a larger house if you want to and still have that much, much larger increased first-time buyer 0% allowance. Or if you're not a first-time buyer or the property costs more than that, you've still got no stamp duty due on the first 250 quid. After that, it's 5% up to £925,000, then it goes up to 10% up to 1.5 million and 12% above 1.5 million. They aren't changing. But what's the point of this? Did we need this? Was there anything really to say that the housing market was struggling? First-time buyers, what happened when we had these holidays before is that prices just carried on going up and up because people were trying to get hold of that holiday. Yes, it was a short-term thing. This is permanent, so maybe you won't see such a rush. I can't really see what purpose this really does and really how it's going to help any house buyer at all, let alone first-time buyers. But that is one of the last things that has been announced. As I said, nothing really going on there broadly about putting more money in your pocket right now or reducing prices elsewhere. This is all about, if we stimulate the economy, hopefully things will be better. I guess we're going to have to wait and see, won't we? My name's Andy Webb. Thank you so much for watching. Let me know in the comments below what you think of this mini budget. Is it good or bad for your finances? And check out these videos here for more on your money.